Welcome back to Ferocious Education. This is Zed. Today we're going to be giving 4 different valuations for the dividends and looking into each one of these. Let's jump right into this one. So TRCH, if you've been watching my series previously, I did talk about TRCH merger with Metamaterials. Did then go ahead and talk about Metamaterials, and then I did go ahead and trying to give an estimate regarding the the TRCH dividends, which came around almost $1.70, $1.50, something around there. And in my last video, I said the minimum dividend, which came around, I think, 50 cents or so, based on their assets. But today, we're going to be giving an overview of different due diligence valuations. By the way, it's not mine, so shout out to the person who made this here. And I did get in contact and they shared this amazing one with me here. And what we're going to be looking at mainly is all these different methods and how they summarize in terms of how much the dividends are expected to be. So let's jump straight into that. So the Torchlight Energy Asset Valuation Due Diligence, and the evaluation case is that it's a multiple of 100-time multiple, the lion's share of where the special dividends will come from. So I'm focusing on that with this evaluation from the Orogrande asset. Now the facts-based information on the transactions found on the Torchlight website. Torchlight owns 72.5% working interest in full Orogrande, 134,000 net acre units. University of Texas royalty around 25%. A mid case of 3.7 billion barrels of oil equivalent. 143 million shares outstanding. Torchlight prospectus dated around February 8th from the SEC filing, and around 10% sales holdback for close out of sold assets, and says see below. So moving on, now section S6 preferred shares for original TRCH holder. Following the reverse split and prior to the effective time, Torchlight will declare and issue a dividend on a pro rata basis of shares of Series A preferred stock, with the rights set forth a Series A certificate designation or the Series A certificate of designation, which is attached on the Annex H, blah, blah, blah. The such asset sale must occur prior and the earliest of December 31st, 2021, the date which is 6 months from the closing of the agreement or the arrangement or the sale expiration date. So the deadline on there is around December 31st, 2021, or 6 months before the arrangement done. So while the arrangement is pending, we are restricted from taking certain actions, such as acquire or dispose of assets. Moving on. Withholding of sale proceeds. They are highlighted here. Withholding an amount of 10% of the proceeds from each O&G asset sale, oil and gas, or the holdback amount to cover potential liabilities and obligations that combined companies may incur in respect of such transactions. Basis of calculations for the Orogrande. We're looking at a sales factoring. So based on the above information, we know that the sales price for any sold assets will likely need to be discounted by 2 factors: percentage of royalty and a closing withholding. So from that 100% sale price, deduct 27.5% for working interest split and 10% for withholding. You're coming around 62.5% of sale price will be paid out in the event of an asset, which I'll call a dividend factor from here on out. Next, acreage of land to apply sales data, and it's based on information from Torchlight website, and the heaviest concentration of Orogrande assets is in the contiguous square parcel seen below, overlay of the low point of the basin where the large part of the accumulation will be, and they did go ahead and highlight that as well. And again, in another graph here, another figure, sweet spot appears to be about 95,000 acres of the overall 134,000 total. So let's focus on the value of this area as one. Again, this is the most impactful to the special dividend amount. And then ways to evaluate the Orogrande asset. So you're looking at a simple 0.50 of each barrel equivalent, so 50 cents per each barrel equivalent, around 3.7 billion barrels. You're looking at 1.85 billion sales. 1.85 multiplied by 625 on the cents on the dollar, which will give us around $1.156 billion, and that will come out at $1.156 billion out of 143 million shares. You're looking at $8 per dividend. So I think that's somewhat fair to assume. Okay, and then acreage based Applied acreage ratio of prime 96,000 acres based on recent comps. Below comp is based on December 2020 sale, so COVID depressed oil prices. Diamondback Energy recent acquired 49,000 acres for $2.115 billion. The acquired acreage was on average of 94% working interest versus the Orogrande being 100%, 72.5% to TRCH and 27.5% partner that will sell an interest alongside TRCH. So Orogrande is 6% more favorable than this competition. I would say almost around the same. And they did share two different PRs. So this one here, it's a subscription based, but I was able to get it. So Diamond Energy to acquire QEP Resources for $2.2 billion. And from there on, you're able to see the proceeds of that $2.6 billion for, and the details here, around 56 drilled but not completed oil wells, etc. The list goes on. And we get to see a bit more highlights from global news regarding their acquisition and transaction highlights around here. So we'll go back towards this due diligence. And they extracted some information from there. So $2.115 billion at around 49,000 acres. So $43,000 per acre, roughly. You're looking around 96,000 prime Orogrande acres multiplied by 43,000 per acre. You're looking at around $4.14 billion. And with the $4.1 billion multiplied by 625 cent on the dollar, you're looking at $2.562 billion. Dividing that by 143 million shares outstanding, you're looking at 17.92 dividend per share. And then you're looking afterwards, barrel price productivity. Looking at another large and mid-cap producers value property is barrel per day production. Torchlight investigation and the test wells infer based on 1,000 run that a full 5,500 vertical and 10,000 foot horizontal would precede BOEPD of 3,000 for each well. With the size of the parcel, we are talking about potentially 1,150 drill locations, but when you have one large zone, the odds favor more similar in nature zones that have potential for hundreds to thousands of more drill locations. For conservative purposes, we will use 1,150 wells multiplied by 3,000 BOEPD, which gives us around 3.45 million BOEPD potential based on information linked below. And they did go ahead with, this is actually a TRCH presentation that is here. So they use that information using a metric of $40,000 per flow BOPD to determine NPV. 40,000 multiplied by 3.450 BOPD, which equals to NPV of around $138 billion value potential to a producer. We're not getting $138 billion. This reflects the value to the producer, but the wells and other infrastructure must still be built out, costing $92 million per well to develop, and their operating costs, etc. The important thing here to be considered is that $138 billion over 3.7 billion barrels of oil, equivalent to around 37.29 cost per barrel to reduce. This means that even if the oil goes back to $40 per barrel, you can still make money. And they got around, the remaining leftover valuation is somewhere around $115.2 billion. Moving on, next, TRCH had previously pitched $9 billion for this asset, and you can see why. $9 billion multiplied by a dividend factor of 0.625, you're getting around $5.625 billion, around 143 million shares. You're looking at around almost $40 dividend per share. Next, drill location. In the Permian Basin, similar undeveloped, unconventional drill locations are valued at between $1 to $2 million a piece. The Orogrande Basin compares favorably to Permian Basin, located 200 miles to the east, with better than average permeability and porosity and high reservoir pressure gradients, all of which is very good. So we all assume the high side of $2 million per possible drill location at 1,150 well locations. 1,150 well locations multiplied by $2 million, you're looking at $2.3 billion multiplied by 0.625 per dollar. You're looking at $1.437 billion going on with 143 million shares. You're looking at $10 per dividend. And so based on the four methods, The lowest projections of the dividend on prime Orogrande 95,000 acres is $8, and the high average is around 18.85, while the high is around 40. There are significant other assets and acreage outside this number. You also get a meta share. And then, yeah, anyway, moving on. I think they added a bit more here regarding prices for oil. I'm just going to read it. Gotta agree with Woody. If you haven't researched this, you probably won't understand. Woody just dropped on you. Data points on outperforming other wells in the area. The low side estimates that the number of full side 10,000 lateral is 1,150 wells on Orogrande assets based on acreage. Even if each can produce 3,000 barrels per day, that is $3.45 million barrels per day. And then max potential, if magically you could develop the entire site all at once, let that sink. In net present value of this asset is 40,000 per BOPD for a large oil company looking to purchase. Each one of these wells is 120 million from full resources extractions perspective, or $138 billion, billion dollars worth of value to a Shell or Exxon. What is the current oil price? Is $65 a barrel. This changes, by the way, by today. I think we're back to 60. That means for them, there is $28 per barrel upside if they can acquire the property at the current rates. And even better, they can still make money if oil drops back to $40. Backtracking. Okay, so that kind of sums it up. But generally speaking, comes to my opinion before moving on towards technical analysis, and before I give that, if you'd like to see more contents like these ones and to get more such due diligence, not only in TRCH but other stocks, make sure to drop a like to this video and subscribe. Click that subscribe and notifications button. If you'd like to join our Discord to continue this discussion, it's in the description below. It's a free Patreon. Anyway, so here's the thing. I might see how they got the $8. They have good logic. I'm not going to deny that. From my perspective, I went down to somewhere around $1.70 based on a projection that someone gave around $10, and they basically multiplied cost per barrel. But I was referring towards some kind of similar cases, similar to theirs. You watched the 2 videos before. I did go through that, and I got an average of $1.70. Now, $1.70 or $1.50 all the way to around $8 or $18 average. That's a hike. That's a lot. Now, I see the perspective, and I see all the speculation. They have good logic behind it. Now, some things that you didn't see here, and this is just things that are going to stir towards that speculation. What's the future of oil? Now, of course, they did it here regarding some of the estimations were regarding competitions, and that's a good thing. You always want to see competitions nearby, but how many companies are going under? How many companies are in sale, supply and demand? All that kind of questions come in place, right? Because if this company was so much under that much potential and everything, so why did they have to liquidate in that sense to reverse merge? That's my perspective, not theirs. They gave you all the tools, everything you need to decide to think, well, is this valuation worth that $18 on average, or even the low term around $8? And that comes to the question. And then you gotta weigh it down with your own speculations, with the current oil futures and everything in between there. Now, let's jump right into the technical analysis. And for the technical analysis, I'm not going to spend a lot on this. So on a 1-week perspective, you're seeing a trading action zone where positive reversals are likely between the $2.19 and $1.34. So that's a safe haven where things can bounce back easily. A golden star, which is a very bullish thing when the 50 SMA crosses the 200 SMA, is probably going to be seen in the next couple of weeks. The MACD here is retracting a little and shows perhaps a negative reversal. Again, when we're doing technical analysis, we're only sitting in a short term. So keep in mind that's different than the valuation you just saw. In terms of everything else on the 1-day perspective, it is more of an accumulation trading sideways. You can get to see that by the moving averages being flat, the MACD not changing much, momentum being almost flat, William %R is oversold, and the average directional index not showing much going on. In terms of the next thing, let's do the stochastic. You see the stochastic fast and stochastic slow are approaching a little bit of a higher level, which is a good thing. And they're not really showing something like a dip around this region where it starts seeing a little bit of a decline there. So it also signals kind of an accumulation period. So we need to look at supports and resistances for that to happen. And so significant support looks at $1.97. 130 after that. Significant resistances, that's only based on the Fibonacci retracements, is 252, 306, 384, and 483. Now we can go ahead and try to look at significant price line actions. A very strong support sits at 209. Below there, $1.82. Below there, 151. Below there, you're looking at 129. And below there, you're looking at 84 cents. Significant resistances, you're looking at 235, 273, 311, 325, 348, 371, 391, and 420. That's a funny one. But anyway, comes to the question to Ed, what do you think about this one? There's a lot of speculations around. And that's the thing, it's hard to pinpoint who's right. You got all these arguments. You got even mine before, right? And you got this trend line that it's still holding above, which I like. But you got all these arguments, all these valuations, all these different speculations, and it's for you to decide which one is correct, which one is most likely going to happen, which one isn't. Now, for me, myself, by the time we get the dividends, it's probably going to be somewhere around maybe second quarter, end of second quarter, etc. That's on the earliest, latest by December 31st. That's a long time. I myself, I don't like oil companies or oil valuations in general because, well, I'm a bit bearish on oil and I'm bullish on EV and green energy, such as, you know, almost a lot of these folks out there in the market are really bullish on EV. I mean, oil is here to stay for a little bit, but longer term, I don't like to keep it in my stocks. So it's a little bit higher risk than I like, but you've seen these valuations. Let me know down in the comments below. What do you think about that? Do you have an evaluation you want to talk about it? Jump on Discord. Tell me about it, and maybe we can put it into the next video. Thanks for watching.